Hi everybody, MVP here. Very warm welcome to you. It's Sunday afternoon, 16th of July. Just wanted a quick catch up, let you know what happened in the market this week. The Forex market, talking about the G8 currencies, the big eight that drive the world's business. And let's see where we are. Just a quick backdrop there. FXCORRELATOR.com is where I operate out of. It's my website. And yeah, I've been trading for many years. I'm at Trade to Win, I'm at Forex Factory, I have this website here, and yeah, I've been looking at Forex, especially more strength meter related aspects of Forex trading since the early 2000s. So without further ado, let's have a look at what's happened this week in the markets using my usual strength meter indicators. Okay, what you're looking at here basically is a kind of customized FX correlator. The FX correlator indicator is available free at my website and free at Trade to Win. If you go there, look for MVP. This one's a bit more customized. You can see 8 colored lines there. That's the 8 currencies. Can you see at the top left there? Here, this represents the different colors, and this is starting from Monday the 10th of July, coming through for the week and showing you where the pippage moved, where were the kind of pips. And in terms of pippage, again, very approximate. If I show you here with this red line, if you see up here, we're getting into the hundreds here. It's about 130, 140 pips up here, and I'll give you another one on the bottom level to see where we got. Some currencies got down to about minus 150. So remember, the dotted line, the white dotted line here in the middle, is the zero line. Call it the mean, whatever you want. That's anything above that line means that the currency during the week was positive, it was bull. Anything below the line means that it moved into negative territory and it was sold off. I can't predict what's going to happen. No one can predict what's going to happen. But what I use, this gives you an idea of where things are moving and gives you a good idea of correlations and various other things between the currencies. Okay. So very quickly this week, what happened? Let's look at Monday. Okay, so Monday, obviously over at the left here, Monday the 10th. I'm just going to bring this down, show the range. Monday's, as usual, fairly slow moving. You can't probably read that, but it looks like actually the whole day, starting from obviously the Asian session coming through from Sunday night into Monday, there wasn't really any one particular currency that moved more than about 30 pips above or below the zero line. That's pretty lightweight, guys. I've got to tell you. I know we're in the summer recess at the moment, July, obviously the week after Independence Day, so you know the summer can be fairly quiet for markets, but that was very low vol. So it was going to be hard to make money that day. If you go back and look online, actually I wasn't trading because I was still abroad at that point. That's right. I think I did plug in at one point, but I'm certainly not going to trade from platforms and websites and servers that don't give me that private support I need. I'm not going to mess about with that abroad. So it was a quiet day. Tuesday, coming into this area here, guys, things started to warm up. Actually, the blue euro got big. Blue euro finally came back from still pretty zero levels, got out into late US session into the 80s. So a good 70 pip move that day. So again, if you were on Euro bull, should have made some money. Although, having said that, you had the Aussie dollar, the orange Aussie dollar chasing it, and the greenback, the most important currency of all, whether we like it or not, is the USD greenback, the green line there, and that was pretty bull as well. So obviously chasing two bull currencies, correlation doesn't figure too well. If you were following the bull USD, you were looking down here really for sales. Look at sterling. Sterling, massive sell-off into early US session, so that was a big trade. You had yen. You could have been selling yen. You could have been selling CAD. You can't see it there. There's plenty there to sell. So interesting day Tuesday. Again, I wasn't quite back. I was actually working as well. I had to go straight into work, so couldn't get in. But very interesting day Tuesday. Still not too much movement. We're only at 80 pips here on the euro, and as you can see into Wednesday, that's where it's ceilinged. Remember, indexes, if you code them correctly, if you follow and trade them correctly, indexes offer the same price action activity or the price action behavior of pairs. Okay, support, resistance, trend, momentum, moving averages, it's all the same. That's why I specialize in it and I use it so much in my trading. Very useful. Wednesday you saw that the euro ceilinged off and then bang, got sold off heavily through Wednesday. So Wednesday's session, that was Asian into all of London, heavy selling on euro, guys. That was where you were selling. Okay. Greenback came off as well during Wednesday. Yen got big. Very volatile. Yen is one of the volatile currencies of the G8. The sterling can also be pretty volatile, especially in these Brexit conditions. CAD can also be quite volatile as well. And sure as eggs are eggs. Do you see this brown here, the brown line here? Brown is CAD. CAD at one point, late London, Wednesday, was at that point showing the most negative of all the currencies for the week. It was down about 80 pips on the week. And within a blink of an eye, and that looks to me suspiciously like US Opens, within a blink of an eye, it was back up at plus 90 and it soared to plus 146. That is something like a crazy 250 pip move. Obviously some very positive news for CAD, early US, and if you held on to that, great, good for you. I wasn't trading in the afternoon. I was far too busy. I had done a little bit of early trading the Monday morning, bit of scalping, but I certainly didn't get into anything as good as that. So that was a nice big fish to hook. And it didn't really matter what you sold against CAD there. I mean, you could have sold anything, you were going to make money. But remember, spreads widen in situations like that, high volatility. It was probably US Open anyway, which is obviously a dangerous time to be trading, but hey, that's what happened. It never got back to those levels. It sold off immediately. See this through end of US into Asian overnight session. Quite a lot of selling back. Why? Because, well, you know, as we know in the market cycle in Forex, market cycle in all different different types of market indices, stocks, shares, whatever you want. That is the cyclical nature of markets. You do not get a straight line. You get movement. You get currencies and everything that cycle. So it came back. Thursday, after the excitement of Wednesday, Thursday was pretty wild and woolly. Again, because we've now got a spread here, we're up to now probably 250 pip range now, 200 pip range perhaps between the currencies. That's how they've moved out in the week. I'm just having a look here and seeing what was going on. Yen, yellow yen here, quite a sell-off through the day. So yen was a sell Thursday. Look at Swissy. Swissy had terrible week. By now it had by middle of by London session, Swissy alongside the euro setting itself up as the real bear currency of the week. Sold off even more, down to minus 100 pips now for the week. And just when you thought going into Friday that should have been, you would have expected a rebound here as traders started to take their profits on shorting Swissy. It got worse. That is a really unusual play there, I have to say. I wouldn't have seen that coming, must admit. Nothing else too much. I mean, sterling had a good run through Thursday. CAD started to come back a bit after obviously some retraces from its high. And look at Aussie dollar. Aussie dollar is the orange one there. Very strong Thursday for Aussie dollar, and actually a fairly strong Friday. In fact, Aussie pretty much finished top dog. Sterling came back on Friday. Great Friday session for sterling. Look at that. Very nice indeed. It came back from pretty much, you know, start of the week there. There's the dotted white line, start of the week. Came back with a flourish. Look at that. Some nice pullbacks to give you an opportunity to buy into it again. Yeah. And you're up at 100. So 100 pip move Friday for sterling. And that was all through the sessions. It gave you some... this early part here would have been Asian. This middle bit here is London, and then even a bonus ball, a little bit of a retrace and back into the US. So it gave you pips all through 24-hour trading period there. Not too shabby. Greenback sold off heavily into US session. Bad day for Greenback. So where was it? It's about minus 50s, minus 60s on the week. Ended up minus 140, so it took 90 pips out. You took 90 pips out of it on Friday if you were trading. So actually Friday was a good day, you know. I know I was scalping early morning and did okay, but yeah, good session. So that's where we are really. What else should I show you? What I'm going to show you now is I'm just going to show you the FX correlator. I'm going to show you it on a setting that I use that gives you an overview of what's going on strategically. So this is the this is on a 4 hour. Okay, doesn't matter what chart you're on, as long as you're on one of the big pairs. Euro dollar I've got here. Drag that up a bit. It's on a 60 moving average. Okay, so it's a 4 hour 60. If you follow my systems, if you've ever seen my triple corrie, or I call it the 3 duck corrie, that system actually incorporates 3 FX correlators, and it tries to tell you what is going to happen if all of the 3 different time frames and settings are aligned, either bull or bear. That's obviously a very strong signal for that currency. The 60 on a 4 hour is my highest level that I use. Not for scalping or anything. Believe me, scalping I'm much more low, kind of low time frame than this. But if you are someone who's just keeping an eye on the week and you want to make some more positional trades during the week, this is quite good. So what it does, very simple. Again, if you see currencies that are above the dotted line, above the 0, you're generally looking to buy these currencies through the week. Anything below, looking to sell them. So we had some strong signals here coming in from last week. You had the CAD. You were really looking to try and get into CAD. The blue euro was another one we were looking for early on in the week for buying. What else did you have? And you had dollar there. And just to check those, let's just see if we did get any activity. Well, as you can see from the start of the week, buying the dollar in terms of short term, remember this is much more short-term trading. This is immediate from the start of the week. As you can see, the euro and the dollar had fantastic first halves of the week. They did pretty well. They were both positive. CAD wasn't. CAD came off. Okay, so if I'd been trading positional trading systems the first couple of days, I certainly would have been keen to buy euro and dollar in my pairs. Obviously not against one another because they're both bull. That was where I would have been looking if I'd been doing positional trades, not scalping. Scalping, I have a different system. Okay, and in terms of selling, well, there was quite a lot of selling. Yeah, you had sterling, you had yen, very very weak yen. Although personally, for me, I think this is a bit oversold. So and actually CAD was overbought up here. So I'd have a tentative eye on those. But I'd probably be more keen to look at some of these guys which are nearer the 0, because there's probably more potential for them to diverge than these guys. These guys are probably going to come off a bit. Yen actually had a good first couple of days, so yen actually was a sell. So it obviously supported the selling of yen here. What about sterling? No. Sterling definitely a buy. So that was a no trade if I'd been using one of these higher time frame systems. But by Tuesday, by the US session, definitely I would have come back in here looking to sell sterling. Why? Because sterling, it dipped here, but look at the sell on sterling. This was definitely get into sterling and sell it against what you can. Okay. So yeah, CAD did come back. You see the bounce here on CAD. So by Wednesday, as we said, I'd definitely be interested in buying CAD here. I mean, who wouldn't be based on this bounce? And so on. And actually, if you notice the orange Aussie D here, it's been positive all the way through the week. And what did I say here? Look at it. It turned positive fairly quickly early on in the week on the 64 hour. So again, very very strong. I mean, there's a solid buy there. Obviously, a lot of people look for the US dollar for a lot of these trades as the pairs. So obviously, Aussie against US dollar was quite a nice buy second half of the week. Buying Aussie dollars, selling US dollar. And look at this US dollar selling off later on in the week. What did we say? Yeah, look at it. US dollar, fantastic. You would have been hammering that on Friday. So just an idea. Remember, this is only the triple collar. You don't just use this. You would use 2 other FX correlators at lower time frames. Again, it's all free at my website and at Trade to Win. Go to the links. It's all there. So have a good week next week. I'll certainly be trying to scalp in the mornings and post it in my usual places. So yeah, if you ever want to contact me, you know where I am. Have a great week. This is MVP signing off, and all the best. Cheers. Bye.